Welcome everybody. If anybody else comes late, they can just join in. Yeah, I thought I would just go through some of the bigger time frames at the moment, and then we can look at potential scalper school ideas on the back of that. So let's just look at this euro that we shorted today. It did ultimately go down to a low of 580. What did we get? We got 588 on the low before it reversed and kicked right up to 615 area. So it's not great. If we close up here, we could start to eke our way back up to this area of resistance. Excuse me. So let's look at what we're left with on the daily. We're left with a potential buy signal. That's what we're left with. What have we got this week? Data is really thin. Aussie rates overnight. Got ECB tomorrow. What's that? Thanks for a look. Got Mr. Draghi speaking at 9 o'clock in the morning. And then we've got Aussie rates overnight. Euro retail sales, that was another one. Yeah, this is the one to keep an eye on. Literally 9:10. And then 10 o'clock is retail sales. We're looking for, so we had a weak number last time. The consensus is for a considerably bigger number on retail sales. Okay. And on the UK, you can see we are really quiet. I really like this site, tradingeconomics.com. The breakdown of data is really, really good. You can refocus on one currency. You can delve into one currency. You can do all sorts on this site. So it's really good. So for the UK data, we've got house price inflation tomorrow, and then on Friday, when the US is off, we have balance of trade and construction. And then tomorrow week, so 8 days time, we've got inflation again. Looking for a slightly higher figure in inflation. Okay, so I would expect some dipping. So look at the pound now then. We'll go for the pound US. So a decent bar. Doesn't really give too much away. You can see this fib support at the low here, 130.26. So we're crashing into these moving averages. If you didn't have moving averages there, you would be looking at, and we just had chart patterns. Let me get, what's the best way of doing this? I'll consider what I'll do. Yeah, if you look at this weekly chart, you can see even though we had 3 weeks of lower closes, what we've effectively done on this weekly chart is just come into this, it got closer to this trendline support underneath. It's a pretty feeble bar, really. I would actually call that a stopping bar. What do I mean by a stopping bar? What I mean is, if I just get my pen, it's to me, it's a potentially inverted hammer. You know, we're used to seeing these things at the bottom of a run for a market that's potentially going to reverse if you're a candle fan. I think this is an inverted hammer. It's a nicer colour. It's not a very nice colour, is it? Here's the end of the run. So if we are going to turn up here, this is a potential spot that we could turn up from. We've got a MACD cross. We're just under the midline, but punching higher, punching considerably higher. So now we've got the rate decision out of the way, and when we actually had a rate rise, it would make sense that this sort of dip would come to a halt. So what I'm trying to get at is that the potential is for this to come at least back to last week's highs. It was, I think I've said this to you before, if you ever get a situation where you get a blowout, let's go back to an hourly chart now. We'll go to a 3-hour chart and pull the fibs off. If you get a blowout like this one here, whoops, didn't mean to do that. So you've literally, a lot of people were not in this trade because that just blasted to the downside. So I think it's highly likely that we could creep back up to this level, this 250 level. So we're 170 at the moment. Excuse me. So I think it's likely that we could creep back to that 250. So I would, if you're going to get long this, so we've overshot this three-wave reversal, overshot it, pull back inside. Ideally, something like 100, 120 will be a good pullback area for this. We may end up having to buy higher. So I think we should watch this tomorrow because this is a significant, decent pullback. So that 137 has picked up this breakup area on the 8th, this drop on the 12th, and these two areas here, and this blast up on the 30th of October. So yeah, I would be a buyer around about the 100, 140 mark, assuming we hold up here overnight and we don't get some sort of disastrous drop overnight. And if we look at the, let's put various analysis on this. Let's look at the fibs. So a decent area of support would have been 984. Instead, you can see that the fact we're above 115 is significant because that's the bottom of the zone. I now take that off and that off. Let's just leave fibs alone. Yeah, you can see it's very, very similar to, we blasted down, shot up, blasted down, shot, well, it didn't shoot up, we ground our way up. So we blasted down again, and now we are correcting. So this 215, 216 is a potential, it will take us close to the drop, the actual start of the drop zone. So I think that is a good target for that one. Okay, let's move on. Let's see what else can we discover from that. Don't think there's anything else that's worth looking at for that one. Now let's just go back to the hourly and look at the normal traditional fibs on the previous week. And so yes, 135. So obviously we've got this resistance up here at 180 area. So that's going to be a problem area. But this is the main fib zone itself. That's the central fib zone. This is the outer fib zone. So it's this outer fib zone that we've come from, this 13105. So I would, like I said, I look for that support area around about 120, 140. See if we can get back to this breakdown area. And if I was going to look for a short, I would literally, I would look into that 255 is an area I'd look to short. 255, assuming we get up there. Let's look at the pound yen as well. Nowhere near as active. Interesting that the Euro US, that pound US is the one that's got the momentum to it. This is, this 149.90 is going to be a really tough area. Obviously 150 could get hit. This is what I mean by a stopping bar. This is another example of what you can get. This is the potential. This bar here is what I was referring to as a stopping bar in the weekly pound US. So this is an hourly chart, and that has generated a push back up. So this all looks short, isn't it? A lot of topping tails, heavy sell into the after that push higher. And then we get this bar here, and then it starts to eke its way up. So one thing I prefer about this one, it stayed in contact with this 50-day moving average. So we're stuck between the 200 and the 50 here. So if we hit the 200 and then come back to the 50 and hold, this could be a great area now to get long. Not drawing that very well. Let me draw it properly. Yes, we've not actually made contact with this trend line when we pushed up here. So if we do make contact around there about 950 tomorrow, push higher, come down to 950, I'd be a buyer at 950 to see if we can then break up to these levels up here. Of course, if we get a sell signal around about 32 is going to be really tough, assuming it gets through there. Get a sell signal up there at 130, 150, and I think we could come all the way back down to this Sunday open and beyond. One thing I was looking for today, I was looking for a test of this 900, 915 today. I was hoping we get a complete retest of Sunday open. That's the only reason why I'm not in this now, is because it's not. It didn't behave like I expected it. I expected it to come back to this 900 level, and it's not done it. So that gives me a bit of a problem. Okay, so I'm going to leave that trend line on there. But I would be a buyer of the pound US dollar tomorrow, and if that one falls back, then I would look at that one. If you look at the 4-hour charts, here's the channel. So we came under the channel here after the rate decision. started closing higher. And there we are. So I think to complete this 50 and 200 crossover, I think we would hit the 200, drop back to support around about this 950 mark, and then attempt to boomerang back to where we dropped from. Okay, so that's setting up. I think that these pound charts are setting up nicely. Euro UN, Euro is much weaker, much weaker for some reason. I think if anything, the Brexit is potentially affecting the euro more than the pound. Trouble is with the euro is you've just got some weaker countries in there, so it tends to get marked down with data from the other part of the zone. So this is sort of in no man's land, really. Close above 220 tomorrow, and that could generate a decent push. Another test of 170 down here for this breakup area would be interesting. This three wave would complete at about 175, 180. So that's worth watching. And if you look at horizontal support, yeah, that's interesting. You look at this 180, 150, 185, and take these fibs off, that would potentially, wow, that's a heck of a lot of support on there. Excuse me, I'm just getting I had a really bad sore throat and cold last week. I'm still not quite cleared it in terms of the after effects. But anyway, yeah, I think that's a great chart pattern. So there's huge pivotal support around about the 175, 180 level, and it's lagging the pound. So that's a incredibly bearish daily. The 100 moving average, which is this, so you got 20, 50, 100, 200. So 200 is yonks away. The daily suggests that any push into something like 240 could trigger an avalanche down to that 100. That's a pretty decent. So the daily is telling you that this is not happy. Yeah, so that's interesting. 250 is the Sunday open. So that for me is a bit of a magnet. They're really weak action today, so any push into the Sunday open for me is a gift. So okay, so let's put it this way: if we come into the market and we're above 200, 220, I think this could push higher. I'd be more inclined to buy the pound tomorrow, let this one drift higher, and then see if we get a sell signal up on this Sunday open. So I'd be looking for this later in the day to see if that could push lower. Let me just make a note of that then. EJ sell 250. Oops, didn't really do that. And the subject of, as far as the MACD is concerned on this one, if you just look at the MACD alone, then what we've got is, you can see the divergence. Well, okay, yeah, divergence up here. There's my favorite pattern. Just breaches it. While it's doing that, you've got divergence down here on the crossover. So you've got this going on. And in fact, even before that starts the big drop, you're just at the midline, even before that starts the big drop. Is that right? Yes. So you've got a chart pattern at the high, divergence on the MACD, and crossing the midline on the histograms. And apart from all that, you've got a lot of resistance up there. So that 440 was a good shot. That kicked off on the 26th. What else have we got? Let's look at pound Aussie. I talked about the pound Aussie. You've got Aussie rates, I think it's overnight. Uh, 3:30 in the morning. We're looking for Aussie to hold, Royal Bank of Australia to hold the rates, but tomorrow night we're looking for a weaker construction level and a drop in home loans. Okay, so I like this daily quite a lot. I was hoping for a lower number. Might still get that if they don't drop rates. This might send this lower. Certainly had a divergence up there again. Divergence is harder to spot, but at least you have this lower close here on the Wednesday, and then the rate decision day saw that drop hard. This 171 is huge, so we're above 171 just. So if we close, I'm going to leave this one more time because I would definitely like a lower close. I need a lower level to get locked short this one. Yeah, okay, there's no point. I'm not achieving anything by drawing all that. So I'm going to have to look at leaving that and hoping that gives me what I want tomorrow. Yeah, here we go. 76 is a return to the Sunday Open. So I would be a buyer of that 50 or 75 area. Let's make a note of that. Indices. If there's any chart you want to look at, then let me know. This is really struggling. We need to make contact with this moving average. We've shot up and we're a little bit adrift. See how we get adrift of the market up here, and then we only start going again after we come back in contact with it. So for all this period here, well, particularly this area here, which was early October, we were drifting, and then once we get these dips, we start to lift off, and of course the big decent pullbacks then give us this area here. So I would suggest that a pullback to this bar here might help that. By the time that happens, this moving average should have come up here. So I'm leaving this. I think we need a good little plunge to come in contact with that one, just as we had here. A big move up, consolidation, drift up, plunge, plunge, and then we go. So that's what I'm looking for here. I need a wave, a couple of corrective waves to come back in touch with that reality of that moving average. Round about 13.3. Anything lower could potentially be a gift. Terrible intraday. If you look at the intraday on this, let's pull the 5 minutes over. And I take the range out, and you guys can tell me what's the most significant aspect of this. I take the range out. What's strikingly obvious about that 5 minute chart? Yes, that's not actually what I was after. Yeah, you're absolutely right, because we had a sell from there just after Europe opened. We had another drop from there half an hour into the Euro session. What I was actually after is the gap. We touched the gap at the German Open, and we touched the gap again at 45 minutes before the close. That's what was most significant to me. If I now put that, I might as well move that now for the today's close. Okay, so today's close was 468. Yeah, so I think 13.5. I think a retest of this 470, 468, 470, or perhaps a little poke higher. If we reject it again, it's definitely worth shorting. And then if we short there, if you're bearish, I would definitely look for, yeah, 470 happens to be the Sunday Open. So 470 is definitely a target for a short, definitely. With that Sunday Open there and that close, anything higher will be obviously better. If you're going to short this, particularly short and hold, so even swing trade short, then you obviously need to get as high as you possibly can. We are looking like, we've effectively closed with a sell signal today. We had a new high on Thursday. Pretty much, we just about engulfed it on Friday. We certainly engulfed it today. That little bar in the middle there is a Sunday Open, which this broker always includes. So any push into 470 or 500 is definitely an option for a short to see if we can, like I said, touch base with about 13.3, 13, anything with 13.3, 13.2. I will look at that with you. Yes, you're absolutely right. I'll do a wave count on this one. You're dead right. We have had several legs up. Leg it up, pull back, leg it up, pull back, leg it up, consolidation, pull back, leg, long consolidation here, leg, long consolidation, leg, consolidation, leg, consolidation. Yeah. So 1, 2, 3, 4, 5. 1, 2, 3. 1, 2, 3, 4, 5. 1, 2, 3. 5 and 3. That's the Elliott wave system. Good old Mr. Elliott in the late 1920s, early 30s. I think he was bedbound or housebound, and wrote his book, The Principle of Elliott Wave, after the late 20, early 30 crashes. Now we've got 1, 2, 3, 4, 5. So we completed a 5 here. We now need a 3-wave correction, assuming this stays bullish. So 3-wave correction would be 1, 2, 3. 1, 2, 3, 4, 5. 1, 2, 3. Yeah. So 3 would bring us back down, in theory, back down to here. And then assuming we're still bullish, so it's the 5 and 3 here. We just had a 5 and 3, or we're waiting for the 3 to complete after the 5 here. And if we're still bullish, then a pullback into this zone here, or somewhere around here, would take us for the next leg up. Okay. Good question. Good question. The question was, if this is this old style trading or is this new algorithm? I think it's algorithms that are using old style trading. That's my theory. My personal theory is the algorithms are using are picking up on old style patterns. That's the way I would look at it. You would have a push up and come back to support, push up, come back to support. So if we put a chart pattern on this lot up here, you would just simply look at, well, like I said, I think we're looking at a full 300 support level. So I would look to come back to that springboard, because that's what we've done in the past. If you look at let's take this fibs off a second. The chart patterns that worked before have been where you've had let me think. And I think the most significant chart pattern for me is always 3-wave. So I would look for hard, isn't it? That suggests to 260, 300, yeah. Let's go back to my original plan. I would say 350. It's only 160, 170 pips higher, isn't it? Lower than where we are now. And let's look at the Dow in the same light. 4-hour chart. Yeah, here's one. Here's something that's interesting. Notice how you get a big bar here, a big bar here. When this gaps down, goes to fill the gap and drops, it drops to this launch pad area. So this is a little bit like the pound. This is what I think is going on with the pound at the moment. So that breakup area there on the 29th of August was retested on the 5th of September and pushed up here from the Friday the 8th of September. So for this Dow, I think this Dow needs to come to about 420. I mean, it's so bullish at the moment, this might just get another leg up. You know, if we break that high, 570, that will just leg up. But if we do pull back, then I would look to buy around about the 400, 420 area on the Dow. let's use this theory again on other. So big leg up, pull back, next leg up. Doesn't work. Works here. Big leg up, pull back into the leg, breakout. Doesn't work here because these lows are much higher. Works here. Fairly significant break up, pull back. Doesn't work here. Yeah, anyway, so I think this is struggling. I think we need a pullback into this area here before we get, ideally, before we get the next leg up. So let's see if we can use that theory with any other chart. It worked well here. This is why I was talking about, I was trading the EuroCAD and the Aussie CAD a couple of weeks back because of this strategy. I was buying, where were we? Yeah, I was buying here. Let me think. I was buying back here. Yes, this is it. This is it. Decent push up, pulls back, 3-wave goes. Decent push here. Pulls back, 3-wave move goes. And yeah, so I was trading this on the Euro, Aussie, and the Euro CAD. Both very, very similar patterns. Nice break up. And I was scaling out up here, and of course left a third on the table with a stop under here, and so I gave a little bit back on the third on a swing trade. So if I wanted to do the same thing again, I know we're not talking about scalping at the moment, we're talking about bigger moves, but bear with me a moment, because obviously if you can scalp the higher, if you're scalping and you've got big pivotal areas, then obviously that has a bigger impact on your potential to scalp and hold, scalp and lock in profits and try and run it. So this Euro Aussie, we've got Aussie rates now overnight. If they hold, then, and this one gets a shot in the arm. Yeah, so we're already potentially got the three-wave triggered there. I'll come back to this. Certainly had a decent down day today. That daily is very, the euro is very weak today. Right, as for scalping, so let's look at oil, because and then I'll talk about scalping, because I talked about oil a lot over the last few weeks. I'll go back to a black chart, that's easier. And I think the most significant thing about this chart is the way in which we held the 200 down here, Friday the 6th. Then we had a three-wave. No, we didn't have a three-wave pattern. I was waiting for oil to come back here, and we never got past the 200. So there's not that many. I'm just trying to look for three-wave patterns. This is why I don't trade oil as much, because it's not as technical as it used to be. It's much lower volumes in oil than when I was trading futures on oil. It wasn't that long ago. So you have a three-wave pattern here. So this level here, 49.94, gave you 150 odd pips. Then of course you break down here, comes off of the 50-day moving average, drops to the 200. You get a little buy pattern under there. So that's a nice harmonic pattern if you're into harmonic patterns, or structural pattern anyway. Okay, so yeah, you get this potential three-wave here. So these levels here, Friday 20th, Thursday 26th, these are all leading up to this there. So once you get this break up here, these levels here, 54 held really well, and here we are at the 161 extension. All right, enough of that. Let's talk about scalping. Let's look at a couple of things that's happened today scalping, and use this in tomorrow's charts. Well, the Dow is really quiet. Let's look at the pound US on a pure scalping level now, because this was the better performer. Right, I'm going to ditch that chart. Let's come down to a 5-minute. So I don't normally use the 50-day moving average, but I will on this. The open was here. Let's thicken that up. That's a bit too weak. I was too busy shorting the euro to catch this, wasn't I? Okay, so look at a good bullish start in the European Open. London opened, we held this floor at 13,080, and then we at 80, so that would have given us 50 pips at the high, and then we had that buying pattern into the Dow open and the London close. Interesting how you had the. I think the thing to note here is this area here. What you've got underneath you is the previous day's close, the 200-day moving average, and the buy signal on the floor of the open trading range. So this would have been a better one to look at. We managed to squeeze 20 pips out of that euro, but this ticked a lot of boxes. We did actually come in contact with a gap at 7 o'clock. So we had actually done a gap fill by the time London had opened. I did pick that up, but unfortunately I didn't put enough weight on it. If you just look to this chart, I showed you the DAX with nothing but the previous day's close on it. So the DAX sold very nicely at the previous day's close. This bought very nicely at the previous day's close. This gap strategy is really important to apply to our trading. And even now, as we speak, the euro is really pathetic. Look at our anchor charts. What do we see on our anchor chart? We see that there's some higher closes into the 15 and 30 minutes into the first hour, and then into the US session, this 13,100 held really, really nicely. So I was concentrating on the euro short, which worked, but nowhere near as good as the pound long. Okay, won't do that. I'll try not to do that again. Okay, so anything else, guys? Anything else you want to talk about? So just to recap, I've got potential looking for sells on the DAX at 470,500. Looking for a sell on the euro yen at 250. I'm looking for buys in the pound US at 120, 140. And I'll be looking at pound Aussie dollar at 50.75 tomorrow. Is oil worth a buy? Yeah, if we see a retest of 56.50, we're already into extension areas up here. you got called away, okay. Family's important. So I understand. Okay, I think I'm going to leave it there unless you've got any questions. Just a shame that, yeah, like I said, the angle I took on the European market was right in dollar strength against the euro, but unfortunately, it would have been more profitable if I'd bought the pound US. Okay, I think I'm going to leave it there. Good. All right. Thanks very much, guys. I'll leave it there and see you in the room tomorrow. So we're in the room for Tuesday, Wednesday. Then I'm away all day Thursday, Friday, flying back late Monday afternoon. So I'll be with you this time next week. All right. Thanks very much, and I'll see you then. I'll get the video off to you. Bye.